The following is a presentation of TFNN. It is now time for The Trader's Edge.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. Do you believe in miracles? Yes! Unbelievable.
Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the opening games. Maybe the opening call of the markets out here. Thanks so much for joining me, folks. I absolutely love being here with you. I treasure your presence today, and my outcome is absolutely to help you to become a better money master, folks. Now, it's also to help lay the tools, the bricks, the mortar, to be able to lead an inspired life. Lead an inspired life, folks, that is what it is all about. My personal outcome, I hope it's yours as well, is each day to be able to grow and be able to increase my skills. So let's go take a look at one of those tools that helps us do that. And, you know, we started off with really the way that I started my programming here at TFNN was that opening. And so let's take a look at the tool of miracles, only fitting. Now, that goes back to the Olympics opening ceremonies this evening over in London. So you got the Summer Games. And so do you believe in miracles? And let me ask you a question. Where do miracles begin? Think about it for a moment. Where do miracles begin in your life? Each of you have absolutely achieved miracles. I know it out there. And where do they begin? Sometimes, folks, miracles actually begin as a result of defeat. Defeat sometimes is the best beginning. Why? Why do you think defeat could be the best beginning out there? For one thing, usually you're at the very bottom. I mean, you are totally at the bottom. You're disgusted, and when you get to the bottom, there's only what? There's really only one way to go, and that way is what? That way is up. And as soon as you say you're not going to take it anymore, as soon as you get conviction behind there, what does the universe do? As soon as you show off of the bottom, what? Because it works the same way in life, it works the same way in our charts. What are you looking for when you come off of a bottom? Whether it's in life or the charts. You're looking for a sign of what? Absolutely. You are looking for a sign of strength. So when you trade these charts, you need a sign of strength. If you're coming off the bottom, in life, you need a sign of strength if you want to come off the bottom. And that's when you say, you've had it, and the universe is just simply going to say, okay. I'm going to let this girl, I'm going to let this gal, I'm going to let this child, I'm going to step aside because they have conviction and they are on their way up. Some of the most inspiring stories, and you can go back, I'll just name a few, but I'll bet you could add dozens. You yourself could add dozens to this. Dozens of folks that started their success as a result of failure. Certainly the U.S. Olympic hockey team. You realize they beat the Russians, a bunch of young kids that came together to beat them, but they had miserable failure in a pregame. I believe it was in New York City. I'm sure it was in New York City. Absolutely got pummeled, got crushed. They were embarrassed with regard to their performance out there, and they had to overcome that. That was a little bit of rock bottom. Why? Because up until that point in time, those kids had sacrificed so much. And then they came out and absolutely got pummeled against the Russians. They stepped up, though. They showed their sign of strength. They went on to win the gold medal. We're going to see that all during the next couple of weeks here, during the Summer Olympics. And take a look at, other folks out there that started with defeat that became successful. And all these are folks that have impacted your life, maybe in business, maybe in art, in some way in life. You got Longfellow, Henry Longfellow. How about Michelangelo? How about Lincoln? How about Ford? How about Disney? I mean, the list goes on and on and on. These are a list of folks that absolutely also had to deal with defeat, had to deal with failure, yet they have become some of the more successful icons out there, and all their success stories started. Why? Because of failure. So don't fear failure out there. Maybe embrace failure. We're going to take a look at failure when we take a look at the markets out here, because you can learn so much from failure. So I'll leave you with this thought for the weekend as we go into Olympic weekend here. Make a commitment to excellence, folks. Just simply make a commitment to excellence, and remember, it's your own personal challenge to use all the gifts, and you have so many gifts, all the skills. Your skills are unlimited. All of your talents, There, folks, you have so much potential in your talents, and use all that knowledge that you have to survive and succeed. So let's go take a look at these markets here for Fun Day Friday out here. Right now, you've got the Dow futures up about 39 points. You got the ES Mini up 7, trading out at 1361.50. That's what we're looking at here on Tiger TV. If you're listening to us on the radio, we thank you so much for doing that. You can always catch us on your mobile device just simply by going to tfnn.mobi. Just click on that. You'll be able to listen to us live on your, and you can always catch the archive of the show on Channel 9. So we've got the NASDAQ futures up strong this morning, up 19 points, 0.7%. They're leading the charge. Russell 2000 futures lagging behind. They're trading out at 776.50. King dollar is kind of up, down, and all around. We'll certainly take a look at the King out there, trading up 2 ticks right now, 26. Yeah, 2 ticks, 3 ticks out here. Gold trading up $7 out at 16.22. Silver up 11 cents out at 27.58. Light sweet crude flat. Up 6 pennies out at 89.45. If we take a look around Europe, you've got the DAX is up 31 points, FTSE up 9. In Asia last night, everything was green. You had the Nikkei up 1 4/10%, closing out at 85.66. The Shanghai still in a, even though it was up 3 points last night, we'll take a look at the Shanghai underneath a major swing point out there. So close the week underneath that swing point, and the Shanghai wants lower price. Problems looming in China for a bit longer, it looks like. You had the Hang Seng up 382 points. That was up 2% last night. Our call-in number is 877-927-6648. And if we take a look, I think yesterday, because, this is what I have drawn on my screen. I haven't updated my screen. We were taking a look at the 1.272 butterfly that was actually setting up on the ES Mini on the 30-minute chart. What also it was setting up was a Gartley pattern. So you had 2 patterns that were completing at the same point. I'll show you what that Gartley pattern looks like. We'll go ahead and draw that in. Now, when you're taking a look at a Gartley pattern, first let's talk about the butterfly, and then we'll come back, because there's 2 butterflies that are setting up, and there are 2 Gartley patterns. There are 2 butterfly cells. There are 2 Gartley cells. And as I said, we can learn from failure. You want to be able to understand these patterns, because you will learn more from failure than you will from success. It happens that way in life. It happens that way in these markets and the patterns that we trade out here. When a 1.272 butterfly fails, where is it going to go to, folks? Those of you that have been listening, you know your Fibonacci numbers. You know your take a look at 1.272 and 1.618. Exactly. When a 1.272 butterfly fails, it goes to the 1.618. That's why if you're trading these, you want to make sure that your stops are on the other side of where the market could move to. If that stop is too wide, don't take that trade. Wait for that larger pattern to set up. In this case here, if you want to take a look at what that 1.618 butterfly is, it's very simple. You're just taking a look at expansion of swing points. And see, I've got with me my trusty rubber band here. And expansion of swing points is very, very important. We're going to come back and we're going to talk about that. But when we take a look at the expansion of swing points on the 30-minute chart, we're going from the swing point at 4:15 in the afternoon on July 23rd, when the ES Mini was out at 1345.25. That was the high of that session. If we take a look at the low that was put in, it was at 5:30 in the evening, July 24th, down at 1321.75. If you take that amount, take that number, that difference, you multiply it times 1.272, you add it to the bottom, meaning add it to the 1321.75 area, and that would take you up to 1356. 1356 is where the ES Mini got up to yesterday, and it just simply stayed there. It stayed there really all day, even coming into the 4 o'clock close, and that was an area of what, folks? That was absolutely an area of resistance. If that area fails, it's going to go to that next level, 1.618. That price, 1365. So let's go take a look at after the how the market reacted to the GDP numbers that were out there. And I'm not going to go into the GDP. We're just simply going to go take a look at how the stocks are trading, how the charts are trading. 1365 is the projected 1.618. That's where, when the 1.272 butterfly fails, it goes right up there. Where did the ES Mini trade to during the 9 o'clock session? Well, it got up to 1364.50. beautiful thing. You have not seen a bearish candle here. Actually, we did see a bearish candle, and that bearish candle was taken out. That bearish candle, well, when I say it was taken out, let me rephrase that. You did see a bearish candle come in at 7:30 this morning. You had a shooting star out there, and that shooting star was followed up with a lower close. You got confirmation. Now, it's really the high of that shooting star. It is the 1361.75, and you're trading at 1361.75 right now. That really is your resistance area out here. And so I'll just simply go ahead and show you what that looks like on the screen. And if that area fails, it says what, folks? It says there's going to be higher price. And in this case here in the market, the higher price is pretty simple to calculate. It'll take you all the way up to the making a 100% move of a move. Where's that at? That's going back to the 12:30 p.m. time frame on July 19th, all the way back up to the July 19th highs when you're up at the 1376 area. Now, as I said, you had both a 1.272 butterfly and you had a 1.618 Gartley. I'm going to go ahead and erase all of these things on the screen with the exception of that last line that we put out there, that last line of resistance. And so we're going to go draw that pattern so that you can see what that looks like. Now, the easy way to take a look at this is just simply go from the high that we just talked about, where you'd make a 100% move of a move. That's out at that 12:30 p.m. time frame. That's at the 1376 price point on the 30-minute chart, and come all the way down to the swing point low coming into 5 p.m. on July 24th at 1321. What you will see also here is that 0.618 retracement was also 1355. That's where the 1.272 butterfly was, but you'll see me go ahead and draw in the Gartley sell pattern that was created also at that same point. That's what you were looking at. So you had two patterns coming together. They told you that you were going to have some good support. Again, folks, you learn from failure. You learn from success out here. And in this case, right now, as we go into the 9:30 session, our area here of resistance, which is really 1365, because that's the 0.786. You can see I've got that drawn on here. And now, if you wanted to draw the 0.786 Gartley, let's go take a look at that. Let's go see what that looks like here on the chart. I'll draw that in so that you can follow along on Tiger TV. You can see it in Technicolor, as we like to say. And so here is your 0.786 Gartley sell pattern out there. Now, here's what happens, especially when you have two patterns coming together. And what I could draw for you is also the butterfly. So just trust me at this stage, if you'd like to trust me, that you have a 786 Gartley sell. You have a 1.618 butterfly sell pattern, all coming together at that 1365 level. I did say that it would move up and make a 100% move of a move. When you have two patterns like this coming together, and really four pattern levels that come together, the market will move beyond that 1376. It will, because when you have a failed couple of patterns like that, what it wants to do is it wants to make a butterfly up to the top. That level's 1390, folks. 877-927-6648. It is Olympic Friday. Thanks so much for joining us. We'll be right back.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers, where she focuses on small cap stocks with market caps under $2 billion, as well as low priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Masters Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows. Plus, see all the charts as they happen live during those shows and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Futures in the futures market, the Dow futures up about 55, ES Mini up 9, and as the ES Mini is trading at 1364, it's making a wonderful 1.272 expansion of swing points. Those swing points being the ones coming out from 3 a.m. this morning to what was just made out there. And we're going to go to our swing point expansion extraordinaire, Larry Pesavento. Larry, thanks for calling.
Hey, Steve, how you doing? Ordinarily, I don't interrupt your show, but there's a couple of things that really look interesting right now.
Yeah.
One is it's the gold market, Steve. We've had this breakout that we've been looking for.
Yes.
For quite some time, and we've completed the bullish butterfly pattern. The bullish Gartley pattern in the XAU, but even more importantly. If we take a look at American Barrick, which is the largest of the gold producers, we made a 61% retracement on that yesterday, and that was a Gartley pattern going back from 3 years.
Okay, so I'll put this on Yep.
And the other thing that's important, and I think the folks in Tiger TV, if they'll take a look at this, because, Tom and you guys, you really preach the volume story. I don't look at it very often.
Yes.
But just because it had made that pattern, I happened to pull up the volume on American Barrick, and it actually was 3 times normal yesterday.
Yes.
Coming at and it closed in the higher end of the range, so your risk is below the low. You're risking, probably $1.25 on this stock, and it could go to 39 without even batting an eye.
Absolutely, and what it was also doing, folks, if you're watching on Tiger TV, you're taking a look at that 62%, 0.618 retracement off of the lows that Larry's talking about from October 2008. Now, at the same time that was coming in, there was also making a 1.272 expansion off of the March 31st, 2010 swing point. So you've got two really nice Fibonacci numbers coming together at that same point, which really helps and gives you, as you were saying, Larry, gives you that good reward to risk, buy in this case.
Yeah, you don't see it with the big volume that often, but this time American Barrick has got 3 times volume. I think is quite large. So
yeah, it was one of the ones that one of the equities that got hit out there. Number of gold equities, AEM, number of gold equities really took off in the last couple of days here. So they may be off the bottom. What else are you looking at out there?
Oh, that's top secret stuff. I can't tell you.
That's good.
Really, just swing trading the euro.
Yeah.
And, we think gold's going to go a lot higher now once we broke out of that 1585 level.
Yes.
Really looks good. All we need for the euro to accelerate now is it needs to get above those weekly highs, above that 123.40 level, and then I think you'll see 126 without too much trouble. And if it's correct, we got one more week into the full moon on the 3rd.
Yes, exactly.
And that's the one that I think is that's going to be really interesting for everyone.
Yes, absolutely. And folks, if you're also watching on Tiger TV, what you're taking a look at here on the screen is the Euro-US dollar daily chart out here. And what you had coming together at the lows were two 1.618 butterfly expansion patterns. And then we're looking at the daily chart here, folks. And then you had a nice bullish engulfing on July 25th. That was Wednesday. You then had some obviously major acceleration yesterday. And just simply on the smaller pattern, you would expect the euro to get up to the 1.24743. So, Larry, how is it that these patterns knew ahead of time that Draghi was going to come out and save the euro?
I've been doing this for 50 years, and I've asked myself that question. I stopped asking because I don't know if anyone has the answer to it. All I know is that it's the natural movement of the market. It's not just the euro; it's in the gold.
Sure.
They're doing them in everything. It's just fear and greed, I guess, Steve. I'm not sure, but what I think it is. I'm just happy that it does it a lot. It doesn't do it all the time, but
right.
It does it a heck of a lot more time than it fails. That's the fun part of it.
Yeah, absolutely. And in the case of the euro here, no matter what we think about it long term, on the shorter term patterns here, it made it back up, made a nice bounce up to, and then we're looking at just on the smaller time frame up to that 0.382 level yesterday, and really didn't back off that much. Yeah. So that tells you, folks, if it doesn't back off that much, it's actually got a fairly strong trend right now on the daily.
I really enjoy your comments about the guys that like Disney and Ford and a lot of these guys that tried things. Edison, tried things that failed, and people don't realize that Walt Disney, he was just about ready to go under in 1936 when he brought out this little tiny cartoon called Steamboat Willie.
Absolutely.
Which became Mickey Mouse.
Absolutely.
That made everything different.
Look, he did file for bankruptcy, and he was fired from his first job, his first newspaper job out there. Wow. But thank goodness he stayed to it. He touched my life. I know he touched your life as well, Larry.
The most popular icon in the world, my friend.
You bet. Hey, Larry, thanks so much for calling. We always love hearing from you. Always call in. We'd love to hear from you anytime.
Bye-bye.
Okay, 877-927-6648 on this Olympic Friday, folks. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. You got the Dow up 54, S&P's up 7, Composite up 12, small caps up 2. You've got Microsoft up 21 ticks, Intel up 11, Google up $5.84. Apple struggling. Apple moving lower, down $1 right now. Not a big deal, but Apple not participating in this move here over the last, let's say, day and a few moments here. Leading things to the upside, Priceline. Priceline up $24 and change. That's up 4%. Expedia, EXPE up 21%. That's having a heck of a nice pop. That's up $9 on a $50 stock. Is trading out now at $55.72. Amazon, AMZN up $11. That's up 5%. NetSuite, N, the ticker symbol there, up 13%. Informatica, INFA, up 11%. Authentic Inc. must be a buyout merger. Authentic agrees to be acquired by Apple, okay, for $8 a share. So they're having a nice 62% pop out there. Ixia, IXIA, XXIA is the actual ticker symbol. IXIA is the name of the company. They're up 19% here this morning. Gilead Science, GILD, that is up 5%. We'll go take a look at that stock. I remember I used to trade that stock, used to be in that, and that was, at that time, certainly one beautiful stock pattern out there. Amgen up 4% this morning. Deckers, DECK, up 7%. And if we take a look at what's moving and grooving to the downside, you've got Green Dot Corp. I don't know what Green Dot does, but Green Dot having a red dot day. They're down 56% here, off 13 bucks. That's a healthy hit. We'll certainly take a look at that. Coinstar trading down 15%. One of the darlings, used to be one of the darlings in the IBD. We'll see if it has volume behind it. Starbucks taking it in the coffee cup this morning, down 11%, off $5. Cerner Corp, CERN, off 5%. Facebook getting hammered away, down 14%, trading out at $23 out there. Netgear, Facebook has not found its bottom. Netgear, NTGR, trading off 11%. QLogic, QLGC, trading down 21%. Vistaprint, VPRT, down 7%. Newmont Mining, NEM, trading off 4%. And Acme Packet, APKT, down 10%. Again, our call number, 877-927-6648. And we do want to say a special thanks to Larry for calling in. Always great to have, one of our co-hosts, one of our compadres, and, call in and just simply share their thoughts. And so what I thought I would do is just to carry out with Larry's thoughts on Barrick Gold. So we gave you a longer-term pattern that was out there. Took a look at a 61% retracement, a 1.272 expansion. So it was basically set up a 0.618 Gartley pattern out there. And if you take a look at a trade on this, one of the things that you'd want to certainly use is I suggest that you use the position size tool. If you haven't done that, go to the homepage at TFNN.com, and over on the left-hand side, you'll see a little slider there. You'll see a little thing that says position size tool. It's got a 30-minute video. All you have to do is sit down. You will learn so much from position sizing, folks, if you don't currently use that. It is the most important thing that you could do inside your trading. So what I'm going to do is pull up that position size tool. We're going to go take a look at Barrick. And Larry gave you some numbers out here. I'm not giving you this as a trade, but I am going ahead and setting this up for you, just simply so you can see how this would work here. In this case here, you're going to type in the ticker symbol, hit the search button, and Barrick Gold will come up. Why do you want to do that? Because what it automatically does for you is it calculates what the average true range is. And when you get into a stock, and Larry was saying, hey, you don't need to risk more than $1 here. Well, if you take a look at the average true range on Barrick, it's $1.11. And so that means that if you do enter the stock, you want to make sure that you're out of just simply the daily noise, because you can be right, but yet the daily noise could take you out of the stock because you have a stop that's too tight and your money's at risk. You don't need to do that. All you need to do is buy fewer shares by having a wider stop. And you're always going to risk 1% or less. Well, Barrick is a stock, so we'll come down to our instrument type. We'll select stock. We're going to go long. We're not going short this. And then you would just simply put in your capital. I'll just simply do this in an increment of $10,000 in free trading capital, not meaning what your total portfolio is, but your free trading capital. If we take a look at Barrick Gold, if you were going to enter it right now as an example, $32.41. Again, I'm not giving this as a trade, just following through. And so you got $32.41. And Larry mentioned a figure of about $39 as a potential reward. Well, if you go take a look at the most, if you take a look at, there's really two swing points out here. You can take a look at July 3rd. The high of that was $39 even Steven. So let's go ahead and use that $39. Well, that didn't work real well. Let's go use that $39 number that Larry gave to us. So we'll type in 39. Now, what you'll also notice here is that when I'm creating stops, I'm using something more than just something average. Why? Because, folks, when you do something average in life, what kind of results do you get? Think about the Olympians this week. If they're there and they have had different varying ranges of performance, and when it comes to their race, if they do average, what kind of results are they going to get? Absolutely poor. They have to be outstanding. So do I. So do you. Each of us do, because when you're outstanding, that's when you get the gold medal. That's where you have extraordinary rewards. Well, I suggest that when you're using stops, that you make sure that it's not only just outside the average true range. I suggest it be some Fibonacci expansion, 1.272 or 1.618. This little tool is nice because it calculates the last 10 days, because it accounts for gaps down or gaps up. That's what this GD here means. We'll go ahead now that we have everything. We'll hit the calculate button. And what this tells us is that if you risk 1% and you go ahead and use the wider stop, then what you're risking is more than 10% of your portfolio. In fact, you're risking 18% of your portfolio on one stock. Don't do that, folks. Don't do that. Even though we're limiting our risk to 1%, don't do that. You can do one of two things. You can change your stop, so you can go ahead and use that at 1.272, or you can change your risk. I'll show you what both of those look like. But here, if you did this, you'd be risking almost 20% of your portfolio. I wouldn't do that. That tells you you're going to enter at 32.41. It says your hard stop's going to be 30.60. Your $1.80 per share stop. Your reward here, your exit price $39. This trade gives you a 3.7 to 1 reward to risk ratio. Doesn't sound too bad, does it? Now, I suggest you do one of two things. You either come back and you make a little tighter stop. Well, that as tight as I would go would be 1.272. So if you use 1.272, you come back and calculate. And what does that tell you? Well, actually, you'd have to use a wider stop. Hey, thank you, Steve. I got to do early morning math here. See how it goes up to 23%? So 1.618 has to be the number unless you're going to go wider, and I don't suggest that you do that. What does that mean? That means you don't have to risk 1%. You really only have to risk 0.5, a 0.5% risk on this trade. So what we're talking about is for every $100, you're just simply risking, or every $10,000, you're risking $50 on the trade. And how many shares would you be buying? Basically, it says 28. I'd round it to 30. So 30 shares for every $10,000 in free trading capital. That's how you use the position size tool. This is how you should, and whether you use this tool or you do the calculations on your own, please, when you're entering a trade, make sure that you are outside the average true range, because I and you and everybody else in the world knows what average will get you in life. And that is no fun, folks. So let's go take a continued look here at the markets. Let's go take a look at Green Dot. Let's see what the news is behind Green Dot, formerly named Green Dot, currently going to be named Red Bloodbath Dot. Let's see, what do they have here? They came out with revenues, 139 versus 119. Couldn't have been a revenue number. They had net income 15.3 million versus 16.3. Really not too bad. They just simply must have had just some very poor guidance out here. We won't look at that. Instead, we'll look at the stock chart and see where it's trading to. And when we go pull up this stock chart, folks, what do you think we are going to find? Any chance we're going to find a volume bar somewhere near or where this stock is headed to? Well, look at the volume bar today. Actually having a total flat tire here. Volume so far in the first 13 minutes of trading is 4.5 million shares. Gazeeks. Okay, well, I said we were going to go find a high volume bar. Unfortunately, this stock here hasn't traded long enough in order to be able, it's making the new volume bar today. This thing, having a IPO back in the July 22nd time frame, was trading at the $41 level, got up as a high. Oh, take a look at this. Do we have volume off the top on this thing the very first time? You most certainly do. Folks, so this is a wonderful thing to be able to learn from. So take a look at this stock here. You know, comes out with an IPO, as I said, back in July 2010, you know, in the $40-ish range, makes a run up into 64.68, does that on December 6th with 111,000 shares. Actually makes a little bit higher with 143,000 shares December 7th. That's where it makes its high. What does it do? Very next trading session, ba-boom! Down with 4.4 million shares. Volume off of the top. When you see that, what does that say? You bet it says get out of Dodge. And what's interesting is this stock gave all kinds of shareholders another opportunity to get out. Look at what it does. It trades lower and it moves back up, coming back into that swing point from December 7th. That swing point at 143,000 shares. It came back up there with 528 and 265. I don't care. When you see volume off the top, folks, that is not what you want to see. That is not a successful chart pattern. That says go fishing in some other hole, because in this case here, you're just simply going to come up with minnows, no kind of big fish. In this case here, those minnows taking you from $65 down to $10.32. This is likely going to see lower prices. That is Green Dot, certainly going to be renamed today. Let's go take a look at Coinstar out there. Coinstar dropping 12%, down $7 and change. Let's go see what that is doing. We know that that is a IBD stock out there, or certainly was on the IBD 50 CSTR. You know, and I'll give you a recommendation, folks. And Larry is talking about, looking for the market perhaps to move up into the next full moon, next Friday, July 3rd. And then if you take a look at the Bradley model, you take a look at, just simply a number of different cycles that are out there of moving into a cycle where the markets are going to move lower. Well, let me tell you the place where you should go looking for stocks to short. And because you've seen it here over the course of the last couple of weeks here. And where would that fishing hole be, folks? Absolutely. Go to that IBD 50 list. Those are the cult stocks that move up to the top. But if you go take a look at that, in fact, if you go back through those papers, those stocks are getting picked off one at a time. And when they get picked off, they get picked off pretty darn big. Now, in the case of Coinstar, it's coming down where? Right into a high volume bar, right into the area where it last had a breakout. That last breakout being December 6th with the 7.6 million shares. The low out there was 48.66. The high was 52.95. You're trading below that right now out at 52.40. If we go take a look at the volume as it comes back in here, it's coming back with volume, no question about it. 2.5 million shares already in the first 16 minutes of trading. And really not so much taking a look at that December 7th candle with 17 million. Take a look at the swing point or the breakout candle that is coming into on February 6th. That has 7.6 million shares. It's certainly going to have that here. This, folks, is broken. I wouldn't recommend getting in on Coinstar right here. You don't like to see stocks do this, and IBD stocks, as I say, getting picked apart here one at a time. Let's go take a look at the weekly chart, see what the weekly chart shows us here. If you are in this and you get... look, here's your first sign of a weakness out here, just like when we took a look at Green Dot. So this thing has some volume, a big, huge volume bar down on January 14th. It moves back up to the top being in the $67 range, giving people another chance to get out. Coinstar having another horrible week, having another bad day out there. I do not like the looks of this stock. Let's go take a look at our Tiger Butter Brew stock out there, Starbucks. Let's go see what Starbucks out with earnings yesterday. Let's go see how the market is handling SBUX. That is the ticker symbol. They're down 12% right now, gapping down with volume. Not a good sign as well. We take a look at it. Where is this? This came back through its most recent breakout trading below that. So we're going to put this on a weekly chart and see where Starbucks making a confirmed A to B equals CD down here today, most certainly. And what I would do is if you just take a look at probably the easy A to B structure, let's go ahead and put this in here. We're going to look at where that bearish engulfing candle gave you the first signal that Starbucks had trouble. And where was that at, folks? That was up at the highs, up on April 16th. Make sure you understand your candles out there. They are wonderful leading indicators, especially when you couple them with Gertley's, butterflies, ABCs out there. So the high, April 16th at Starbucks was $62 even. Hey, that's one of Basil's round number highs out there. And if we take a look at Starbucks, the B point that I would use on this could be May 18th down at 51.43. It bounces up into the time frame of June 20th, gets up to 55, actually June 21st, 55.97. So that B point out there has 11 million shares. Today you come through it, you're already through with 5.5 in only 19 minutes of trading. So you're busting through that. The A to B equals CD is $45, but it looks like Starbucks wants to go lower, probably down into in 44.52 to 45.41 should be a area of support for Starbucks. But it looks to me like Starbucks probably wants to come all the way back to $40 out there. Let's put this on the weekly chart. See what we see on the weekly chart. Ooh, that does not look good, does it? If we take a look at volume on the weekly chart, volume is at 38.21 on Starbucks. If you're in that stock, be careful, folks. 877-927-6648 on this wonderful Olympic Friday. Thanks so much for joining us. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit TFNN.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow up 69, S&P's up 9, Composite up 13, and it is Fantastic Friday. Following this show, you got Tom and I doing the Nadex trading hour bull bear spread option show. Then we've got Basil Chapman from 11 to 12. Nico DeHaan. This is all about health and wealth today out here. Nico from 12 to 1. Daryl Martin 1 to 2. Full lineup today. David White from 2 to 3. Ken Shreve 3 to 4. And the Tom O'Brien show from 4 to 6. 9 hours of programming here on the TFNN television and radio network. Oh, you got to love that. If we take a look at gold, let's go take a look at gold. There's going to be a lot of folks this over the next couple of weeks going for gold over in London at the Olympics. And if we take a look at gold here, we're looking at the gold contract trading out at 1621, and it's running into a resistance area. I showed you this symmetrical triangle that gold had formed. It broke out of it yesterday, and right now, what is stopping it is this 200-day moving average. I don't know why that 200-day moving average is stopping it, but if you take a look at gold, that has held gold in check going all the way back really to May 4th, 2011 out there. You get gold to get above that, and I'm in the same camp with Larry that gold would be looking to break out. Where would it head to? It would head to this descending tops line first, and if we take a look at what that descending tops line is, let's just look at one of our retracements. Let's go from the highs back in September 2011 out at the price point of 1923.70 all the way down to the low that was put in right here. What's the date on that? May 16th, when he had gold trade down to 1526.70. The 0.382 retracement makes sense. $16.78. So that would be coming right into that descending tops line. That is, though, gold has to break above this 200-day exponential moving average. That becomes something very easy for you to be able to put on your charts, because all charting software packages on a daily chart should have that. If we take a look at silver doing forming a similar pattern out there. You can see these black lines here being the same symmetrical triangle, breaking out yesterday, trading to at its lows of this session here, and you can see it's the 50-day that has a 50-day exponential moving average that has held silver in check. It has held silver in check going all the way back into the time frame of March 14th, 2012. Any time that silver has tried to get up there, it has acted as a repellent zone. Now the repellent zone is going to be, the battle's going to be in between, in essence, the price of $27.98 or so, and you had silver get up to a high of $27.85, down to the top of this descending tops here, the smaller descending top. So that is on silver out there. If we go take a look at what else is popping, we didn't take a look at what was popping in the marketplace. Let's go take a look at something like, let's go take a look at Expedia. We haven't looked at Expedia, Expedia.com. EXPE. They are having a wonderful day. They are trading up 20%. So gapping up with some decent volume here, especially only having been the market only being open for 27 minutes. So Expedia up on 3.3 million shares. Looks like it may be up. Let's pull this chart back. Go to a monthly here. So you got Expedia at all-time highs. Let's see if it's making some type of expansion, just like everything out there. Oh, it's past its 1.618 expansion. Expedia having some juice in it. Folks, stay tuned. Tom and I will be up next, and it is Olympic Friday. And you know what that means, folks? That means that there's all kinds of miracles that are going to happen. You've got some of those within inside yourself, folks, because your potential is unlimited, folks. Go out there. Have a great weekend. Stay tuned for Tom and I. If not, I'll see you on Monday morning. Bye-bye now.